Gen Z is never going to become millionaires. And I know that sounds like clickbait. I know it sounds like doom and gloom designed to make you feel hopeless about your future. But hear me out, because I've actually looked at the numbers, I've looked at the systems, and I'm going to be real with you. The traditional path to building a $1 million net worth is dead for our generation. And I don't think that's a bad thing. I actually think it's the point. See, about 6 months ago, I was in a completely different place. I had no real saving. I had no investment portfolio. I had a 9 to 5 that was barely covering my expenses. And I kept hearing the same recycled advice from every single financial guru on this platform. Save 10% of your income. Max out your 401k. Invest in index funds and wait 40 years. And you'll retire a millionaire. And I looked at that math. I really sat down and looked at it. And I thought, dude, I don't have 40 years of patience in me. I'm not going to grind at a desk for 4 decades hoping the stock market cooperates and inflation doesn't eat my savings alive. So I did something different. I started making YouTube shorts. And in under 3 months, with a break in between where I didn't even post, I was monetized. I earned $1,000 with YouTube shorts from a channel I built from absolute zero. No existing audience, no connections in the industry, no marketing budget, no team behind me, just me, my phone, and a willingness to figure it out as I went. And no, that's not generational wealth. I'm fully aware of that. But it completely shattered the way I think about money, about building wealth, and about what's actually possible when you stop following the old playbook and start writing your own. It rewired something in my brain, because up until that point, every dollar I'd ever earned had come from someone else deciding I was worth a certain amount per hour. Every paycheck had someone else's name on the top of it. And then suddenly, for the first time in my life, I earned money from something I created, something I owned, something nobody could take away from me or decide to stop paying me for. And that feeling, that shift, was worth more than the $1,000 itself. And that's exactly what I want to talk about today. Because here's the thing, the entire financial system in this country, the whole apparatus of wealth building that they teach you about in school, in books, on podcasts, all of it, it's designed to create millionaires from a very specific type of person. And that person is not you. It's not me. It's not anyone in Gen Z who doesn't already come from a family with money. And I'm going to walk you through exactly why that's the case, layer by layer, and then I'm going to tell you what I think we should actually be doing instead. Because I'm tired of the doom and gloom without solution. I'm tired of people telling us the system is broken without offering a way out. So let's start with what should be the most obvious thing in the world, but somehow nobody wants to say out loud. The traditional path to becoming a millionaire in America used to be straightforward. You get a degree, you get a decent paying job, you buy a house in your late 20s or early 30s, you invest steadily into your retirement accounts for 30 or 40 years, and eventually, through the magic of compound interest and property appreciation, you cross that $1 million net worth threshold sometime around your late 50s or early 60s. That was the deal. That was the American contract. Show up, work hard, be patient, and the system will take care of it. And for our parents' generation, for our grandparents' generation, it kind of worked. Not perfectly, not for everyone, but enough people made it through that pipeline that the promise felt real. It felt tangible. You could look at your neighbor, your uncle, your parents' friend from church, and see living proof that the system delivered on its end of the bargain. But here's the reality for anyone born after 1995. That pipeline is completely shattered. It's not cracked, it's not struggling, it's gone, and the numbers prove it beyond any reasonable doubt. Let's just talk housing for a sec. The median home price in America right now is hovering around $400,000. Some cities way higher. In places like Austin, Denver, Seattle, you're looking at $500,000, $600,000, $700,000 for a basic 3-bedroom house. Nothing fancy, just a normal place to live. Now, when our parents were buying their first homes in the late 80s and 90s, the median price was around $120,000. Some places even less. So housing prices have more than tripled. But did wages triple? You already know the answer. But the median household income has barely doubled in that same period when you adjust for inflation. So the math is simple. Houses cost 3 times more. People earn roughly the same in real dollars. And the bridge between those two numbers is supposed to be what? Hustle. Positive thinking, financial discipline. It's just math. The math doesn't work for our generation the way it worked for theirs. And that's not because we're lazier or less disciplined or worse with money. It's because the fundamental economics of housing have shifted against us. And housing isn't just housing. It's the single most important wealth building mechanism in American middle class history. When your parents bought a house for $120,000 and sold it 20 years later for $300,000, that wasn't just shelter. That was their retirement plan. That was their children's college fund. That was their pathway into the millionaire class. And that door is closing. According to recent surveys, only about 30% of Gen Z believes they'll ever be able able to afford a home. 30%. That means 70% of our entire generation has already mentally given up on the cornerstone of American wealth building. And honestly, can you blame them? When you're 24 years old with $30,000 in student loan debt, making $45,000 a year in a city where rent is $2,000 a month, the idea of saving up $100,000 for a down payment on a $400,000 house isn't ambitious. It's delusional. It's like telling someone who's drowning that they just need to swim better. Technically not wrong, but completely useless in the moment. And speaking of student loan, let's talk about that hole our generation starts in, because this is something that just makes me angry every time I think about it. The average Gen Z college graduate is walking out the door with over $30,000 in student loan debt. That's the average. Plenty of people have 50, 60, 80, even 100,000 for degrees that don't even guarantee a job paying more than 40 or 50,000 a year. So you're 18 years old. You're told by every adult in your life that college is the path, that you need a degree to succeed, that it's an investment in your future, and then you borrow tens of thousands of dollars at 5, 6, 7% interest. You spend 4 to 6 years getting the degree, and you come out the other side into a job market that pays you barely enough to cover rent and loan payment, let alone save or invest. You're starting your financial life in a negative position. You're not at zero. You're at negative 30,000, negative 50,000, and the advice you're getting from the personal finance world is to save 10% of your income and invest for the long term. Invest what? The $80 left over after rent, food, transportation, insurance, and your minimum loan payments? The math literally doesn't math. And this isn't a personal failure. This is a systemic design. The student loan industry profits from lending money to 18-year-olds who don't fully understand compound interest. The universities profit from raising tuition every single year above the rate of inflation. The employers profit from requiring degrees for jobs that don't actually need them, which keeps the demand for college artificially high. And Gen Z is caught in the middle of all of it, starting their adult lives financially underwater and being told it's their fault for not budgeting better. And there's another layer to this that nobody talks about: inflation. Not the textbook definition of inflation that your economics professor explained. I mean the lived, daily, felt experience of everything costing more every single year while your paycheck stays flat. Grocery. A basic grocery run for one person. And I'm not talking organic specialty items. I'm talking rice, eggs, chicken, vegetables, bread. The basics cost significantly more today than it did even 3 years ago. Gas, insurance, streaming subscriptions, phone plans, literally everything you need to exist in modern society costs more than it did last year. And the year before that, and the year before that. And your salary adjustment, if you even get one, is what, 2%, 3%? Meanwhile, actual inflation has been running at 5, 6, sometimes 8%. You're falling behind every single year, even if you do everything right. Even if you budget perfectly. Even if you never buy a coffee, or eat avocado toast, or do any of the other things boomers love to blame millennials and Gen Z for. The math is working against you at a fundamental level. Your purchasing power is shrinking annually. And the financial advice industry's response to this is what? Just invest more. Just save harder. Just cut more expenses. It's like trying to bail water out of a sinking ship with a teaspoon while someone is drilling new holes in the bottom. At a certain point, the answer isn't to bail faster. The answer is to get on a different ship entirely. And then there's the gig economy trap, which I think deserves its own conversation because it's something a lot of Gen Z has fallen into thinking is the solution. The gig economy, Uber, DoorDash, TaskRabbit, Fiverr, these platforms position themselves as freedom. Be your own boss, work your own hours, make money on your own schedule. And on the surface, that sounds incredible. That sounds exactly like the independence I'm talking about. But here's the reality. The gig economy is not entrepreneurship. It's not independence. It's employment with worse terms. You're still trading your time for money, except now you don't get health insurance, you don't get paid time off, you don't get unemployment protection, and you're responsible for your own taxes. And the platforms take their 30% cut before you even see a dollar. When you're driving for Uber, you're not building an asset. You're not creating something that grows while you sleep. You're not developing a skill that compounds over time. You're renting your time and your car to a corporation that could change its pricing algorithm tomorrow and cut your income in half. And millions of Gen Z are stuck in this trap thinking they're being entrepreneurial when really they're just doing shift work without the benefits. And I say this not to look down on anyone doing gig work. If that's what pays the bills right now, do what you need to do. I respect the hustle. But let's not confuse survival with strategy. Driving for DoorDash is survival. Building something that generates income whether you're working or not, that's strategy. And our generation desperately needs more strategy and less survival. And here's where it gets even more frustrating, because when you look at who is actually becoming millionaires right now in 2025 and 2026, they're not doing it through the traditional path either. They're using the exact same broken systems that are locking the rest of us out, but they're on the winning side of the equation. Let me walk you through this because I think it's really important to understand. The first way people are still becoming millionaires is through real estate investing, but not the way your parents did it. They're not buying a starter home and building equity over 30 years. They're professional investors. They're acquiring multiple properties, leveraging bank debt at low interest rates, using Section 1031 exchanges to defer capital gains taxes indefinitely, setting up LLCs to shield their rental income, and building portfolios that generate tens of thousands in passive monthly cash flow. And who gets to do that? Who has the capital for a down payment on an investment property at age 25? People who already have money. People whose parents gifted them $50,000 for their first deal. People who had family connections in real estate to get mentored into their first acquisition. People who grew up in environments where real estate investing was dinner table conversation, not some abstract concept they discovered on a Reddit thread at 2 in the morning. So when you see someone on social media flexing their real estate portfolio at 28, walking you through a property tour, talking about cash on cash return, understand that in most cases, that person didn't start from zero. They started from a foundation of existing family wealth, inherited connections, and financial literacy that was handed to them like a birthday gift. And I'm not hating on them. If your parents can give you a head start, take it, seriously. But let's stop pretending it's a level playing field where anyone can just hustle their way into real estate million. It's not. The real estate path to millionaire status is gated by access to capital. And access to capital is gated by family wealth. And family wealth is gated by the exact same systems that are failing Gen Z right now. It's a closed loop, and the second path to becoming a millionaire right now is through tech and startups. And this is America's favorite fairy tale. The college dropout who builds an app in their garage and becomes a millionaire by 30. The visionary founder who raised $5 million in seed funding on the strength of a napkin sketch and raw ambition. And yeah, that narrative exists because it happens sometimes in very rare, very specific, very heavily publicized cases. But here's the part they cut out of the movie. The vast, overwhelming majority of successful tech founders came from upper middle class or wealthy families. They had safety nets thick enough to absorb 2 or 3 years of zero income while they built their company. They went to Stanford or MIT or an Ivy League school where they sat next to the sons and daughters of venture capitalists and angel investors. They had access to networks, mentors, and early stage capital that most people don't even know exists, let alone have access to. Research from the National Bureau of Economic Research found that children from families in the top 1% of income are 10 times more likely to become inventors and entrepreneurs than children from below median income families. 10 times more likely. Not because they're smarter, not because they have better ideas, not because they work harder, because they have access. Access to education, access to capital, access to risk tolerance that comes from having a financial safety net underneath, access to networks that connect you with the right people at the right time. And that access is the actual currency of wealth building in this country. Not talent, not hustle, not grinding harder than the next person. Access. So the tech startup path to millionaire status is gated too, just behind a different door with a different lock. And the third traditional path to becoming a millionaire is through the stock market. Long-term passive investing, compound interest, dollar cost averaging. The thing every single personal finance channel on this platform preaches as the universal key to wealth. And look, I'm not going to sit here and tell you the stock market doesn't work as a wealth building tool. Over very long periods, it does. The S&P 500 has returned roughly 10% annually on average over the last century. That's math. That's real. But here's the part they conveniently leave out of those motivational investing videos with the compounding interest calculators. To become a millionaire through index fund investing alone by the time you're 60, you need to invest roughly $500 to $700 per month starting in your early 20s. Every single month, without missing a single one, for 35 to 40 consecutive years. And that calculation assumes consistent 10% average annual return, which are averages that smooth over years where the market drops 30 or 40% and you have to watch your portfolio dissolve while still forcing yourself to contribute. It assumes zero major life disruption, no medical emergencies that drain your savings, no extended layoffs, no deep recessions that coincide with when you need the money most. It assumes you can actually afford to set aside $500 to $700 a month while simultaneously paying rent, student loans, health insurance, groceries, transportation, phone bills, and every other expense that comes with being alive in 2026. And for a generation where over 50% are living paycheck to paycheck, where the average person under 30 has less than $1,000 in their savings account, where 30% can't cover an unexpected $400 expense. Telling them to invest $700 a month isn't advice. It's fiction. It's like telling someone who can't afford groceries this week that they should really be thinking about diversifying their vintage wine collection. Technically a wealth strategy, practically offensive. Now here's where I want to completely flip this conversation, because I said at the beginning that Gen Z will never become millionaires, and that's the point. And I meant every word, because I think the obsession with hitting $1 million net worth through traditional means on a traditional timeline is itself the trap. It's the carrot they dangle, keep you running on the treadmill for 4 decades. Think about what $1 million in net worth actually looks like for most people who get there through the traditional path. It's a house they own that they can't sell without becoming homeless. It's a 401k they can't touch until they're 59 and a half without penalty. It's a brokerage account that could lose a third of its value in any given quarter. It's numbers on a screen, numbers locked inside assets you can't use to actually improve your life today. And you spent your best years earning, your 20s, your 30s, 40s, the decades where you had the most energy, the most creativity, the most capacity for building something incredible. You traded all of that for the promise of financial comfort at 60. Maybe, if the market cooperates. If you don't get sick, if your company doesn't lay you off at 53. That's the deal. And I look at it and I think it's one of the worst trades in human history. Trade your youth for the hope of a comfortable old age. And I think Gen Z is starting to see through it. We're the most entrepreneurial generation ever measured. That's not my opinion. That's data from multiple research institutions. More people under 25 are starting businesses right now than at any previous point in recorded economic history. And we're not starting the same businesses our parents' generation started. We're not opening dry cleaners and accounting firms and dental practices. We're building digital-first businesses, content creation, e-commerce brands, software tools, digital products and templates, online education, community platform, consulting and freelance services delivered globally through the internet. Things that can scale without $200,000 in startup capital. Things that can generate real income from anywhere on the planet with a laptop and a Wi-Fi connection. Things that don't require waiting 4 decades to see the return on your investment of time and energy. And I'm gonna be real with you right now. That's exactly what I did. I didn't sit around following some retirement calculator's 40-year projection. I didn't wait until I had the perfect plan or the perfect amount of savings or the perfect equipment. I started making YouTube shorts. I picked shorts specifically because the barrier to entry is functionally zero. You need a phone, a free editing app, and the willingness to look stupid for a while. That's the entire startup cost. No studio rental, no professional camera equipment, no business loan application, no pitch deck for investors, no trust fund from your parents, just a phone and a decision. And my first videos were objectively bad. I'm not gonna sugarcoat it. They were rough, the editing was amateurish, the hooks were weak, pacing was all wrong, the audio quality was mediocre, and I posted them anyway. Because here's something that took me almost 3 years of consuming online business content to finally internalize. Done is better than perfect every single time. Imperfect action will always beat perfect plan. Always. The only way to get good at something is to start bad and improve through repetition. There is no shortcut past that process. Nobody's first video was great. Nobody's first business was profitable on day one. Nobody's first anything was polished. You start messy and you refine as you go. That's how it works. That's the only way it works. So I kept going. I studied what was actually performing in my niche. I analyzed the top videos from creators who were crushing it in the same space. I broke down the hook structures, the retention pattern, the editing rhythms, topics that resonated versus the ones that lost. I treated it like a skill to be developed, not a lottery ticket to be scratched. And within 3 months, with a gap in the middle where I took a break and didn't post at all, my channel was monetized. One video hit over 4 million views. I earned $1,000 in my first 7 days after getting into the YouTube Partner Program. And I know I keep coming back to that number because it changed my entire perspective. $1,000 in 7 days from something I built myself. Not from a boss deciding I was worth a certain hourly rate. Not from a bank deciding my investment portfolio deserved a certain return. From something I created, published, and owned. And that distinction matters more than the dollar amount because it proved to me through my own lived experience. Not through theory, not through someone else's testimony. Through my own hand that you don't have to wait. You don't have to be patient for 40 years. You don't have to play their game on their terms, following their rules on their timeline. There are real, accessible, tangible paths building income and eventually wealth that don't require the traditional playbook. And that shift in belief, that's worth more than any stock pick or real estate tip anyone could ever give you. Because once you believe it's possible, your actions change, your decisions change, your entire trajectory change. And that's exactly what happened to me. The momentum from that first success compounded. I kept creating, I kept improving, the income kept growing, and suddenly I was on a completely different path than I was was 6 months earlier. Not because I'm talented or special or gifted, but because I stopped consuming and started creating. And that brings me to what I think is the most important point in this entire conversation. The actual divide in our generation isn't between people who have money and people who don't. It's not between the privileged and the underprivileged. It's between people who create and people who consume. And right now, if we're being honest, most of Gen Z is still on the consumption side. Still watching, still scrolling, still saving videos to watch later, still bookmarking courses to take someday, still telling themselves they'll start next month when things calm down. And I get it. I was that person for 3 years, 3 full years of my life. 3 years of watching other people's success stories on this exact platform. 3 years of consuming motivational content about making money online. 3 years of bookmarking courses I never finished. 3 years of downloading apps I never opened. 3 years of starting business plans in Google Docs that I abandoned after 2 paragraphs. 3 years of knowing exactly what I should be doing and not doing any of it. 3 years of the same bank account balance, the same frustrating job, the same cycle of inspiration on Sunday night, followed by inaction on Monday morning, followed by guilt on Wednesday, followed by more consumption on Friday night to numb the guilt. I'm not exaggerating when I say 3 years. I literally spent 1,000 days consuming content about online income while generating 0 online income myself. And the worst part, I was getting smarter. I understood funnel. I understood content strategy. I understood thumbnails and hooks and retention curves and SEO and monetization threshold. I could have given a lecture on how to build an online business, but my bank account didn't care about what I knew. It only cared about what I did, and I wasn't doing anything. And that's the cruelest trap of all, the consumption trap, where you feel like you're making progress because you're learning, but learning without action is just entertainment. It's Netflix with a productivity label on it, and I was addicted to it. The dopamine hit of discovering a new strategy, the feeling of I'm going to start this next week, the comfort of preparation without the risk of execution. And what finally broke the cycle, it wasn't a new strategy. It wasn't some hidden knowledge I unlocked. It wasn't a guru telling me the one thing I'd been missing. It was just deciding to start. That's the whole thing. I just started. I opened my phone. I made a video. It was bad. I posted it anyway. I made another one the next day, and the next, and the next. And slowly, painfully, awkwardly, things started to work. And here's the beautiful thing about what our generation has access to right now that no previous generation had. The tools for building independent income are not just more accessible than before. They're radically, fundamentally, historically more accessible than they have ever been for any generation of humans who have ever lived. That's not hyperbole. That's reality. 20 years ago, if you wanted to reach an audience, you needed a television network, a radio station, or a major newspaper to give you permission. You needed gatekeepers. You needed someone at a desk in an office somewhere to decide you were worth putting in front of people. Today, you can reach millions of people from your bedroom with a phone that costs $200. The distribution is free. The platforms are free. The audience is already there. The only thing you need to supply is content and consistency. And you don't have to be a YouTuber. That's just what clicked for me. The underlying principle is universal. You can freelance your skills and get paid directly by clients who find you online. You can build digital products, templates, tools, guides, and sell them while you sleep. You can start an e-commerce brand with print on demand or drop shipping and test products with almost no upfront cost. You can offer coaching or consulting once you develop real expertise in any field. You can build a newsletter, a podcast, a paid community. The list is genuinely endless, and every single one of those paths has a lower barrier to entry than buying a $400,000 house, building a stock portfolio over 40 years, or getting accepted into a Y Combinator cohort. Now, I know the objections are lining up. I can practically hear them through the screen, and I want to address them because they're valid concern, even if the conclusions people draw from them are wrong. The first objection is always the same. Not everyone can be a content creator. It's too saturated. There's too much competition. It's too late. And you're partially right. Not everyone will succeed at content creation specific. Not everyone will go viral. Not everyone will monetize in 3 months. That's true. But here's what that objection completely misses. You don't need to go viral. You don't need millions of followers. You don't need to be internet famous. What you need is to generate enough independent income to shift your financial trajectory. And that number is way lower than most people imagine. If you can consistently bring in $2,000 to $3,000 per month outside of your day job through any independent income stream, your entire financial life transforms. That's the money that funds your actual investment. That's the money that builds a real emergency fund. That's the money that eventually gives you the leverage to walk away from a job that's draining you. You don't need 1 million followers for that. You need a useful skill, a way to deliver it, and the discipline to show up every day. The second objection is about stability. stability. YouTube income isn't stable. Freelance income fluctuates. You can't build a real life on unpredictable revenue. And I want to push back on this one hard, because what exactly is stable about the traditional path, right? Is a corporate job stable when companies are executing mass layoffs every single quarter, when entire departments get dissolved overnight because some executive on the 14th floor decided to restructure, when AI is automating white-collar jobs faster than anyone predicted, and entire categories of work that existed 5 years ago are being replaced by software that costs $12 a month. I mean, think about it. Graphic designers are competing with AI image generators. Copywriters are competing with language models. Data analysts are competing with automated dashboards. Customer service reps are being replaced by chatbots. Paralegals are being replaced by document AI. And this isn't coming. It's here right now, today. The people who think their 9 to 5 is safe because they have a degree and a title haven't been paying attention. No corporate job is guaranteed anymore. The average tenure at a single company for people under 35 is less than 3 years. 3 years. You're not building a career at these companies. You're renting a desk until they decide it's cheaper to replace you with software or someone overseas. That's the stability people are defending when they tell you entrepreneurship is too risky. Is the stock market stable when your retirement fund can lose 40% of its value in a 3-month period? When a pandemic or a banking crisis or a geopolitical event can wipe out a decade of gains in weeks? Is real estate stable when housing markets crash every 10 to 15 years and leave millions of people owing more on their homes than the homes are worth? The narrative that traditional paths are safe and entrepreneurial paths are risky is one of the most effective lies ever sold to working people. Everything is risky. The 40-year career path is risky. The stock market is risky. Real estate is risky. Starting a business is risky. Doing nothing is risky. The question is not whether you'll face risk. The question is which risks align with the life you actually want to live. And personally, I'd rather risk 2 to 3 years of hard, focused work building something I own than risk 40 years of my life hoping someone else's system works out in my favor. And the third objection, the one that honestly makes me want to throw my phone across the room, is when people say I missed the boat. It's too late. The golden era of YouTube or content creation or online business is over. People said that in 2016. They said it in 2019. They said it in 2022. And every single year, new creators explode from 0 followers to massive audience and build real sustainable businesses. The platforms aren't dying. They're evolving. And the people who evolve with them and actually start are the ones who build something. The people who sit on the sideline narrating why it's too late are the same people who'll be saying the exact same thing 3 years from now. Still watch, still consume, still too late. You haven't missed any. You just haven't started yet. And those are two very, very different things. Now, I want to zoom out because there's something bigger happening here than individual money-make strategy. I think what we're witnessing with Gen Z right now is genuine revolution. For the first time in modern economic history, an entire generation is collectively looking at the deal society offers. Work 40 years for a corporation and we'll let you rest when you're old, and saying no thank you. Not because we're lazy, not because we lack work ethic, but because we can see the deal clearly for what it is. It's a bad trick. You're being asked to surrender your 20s, 30s, and 40s, the decades where you have the most physical energy, the most creative capacity, the most ability to build and explore and experience life, in exchange for the promise of financial comfort starting around 60, maybe, if nothing goes catastrophically wrong between now and then. And that's a massive if. People get diagnosed with serious illnesses in their 40s and 50s. People's bodies break down from decades of stress. People get laid off at 53 and can't find comparable work. People die before they ever touch their retirement save. The entire 40-year plan is built on the assumption that you'll be alive and healthy enough to enjoy the reward at the end. And every year, life proves that assumption wrong for millions of people. So when I say Gen Z will never become millionaires, and that's the point, what I'm really saying is this: chasing $1 million net worth through traditional systems on a traditional timeline is the wrong target entirely. The right target is freedom, not a number. Freedom. And let me be specific about what I mean, because that word gets thrown around a lot by people selling courses. Financial freedom means your independent income covers your monthly expenses without requiring you to trade time for money at a job you didn't choose. Time freedom means you decide how your Tuesday afternoon is spent. Not a manager, not a schedule, not a commute. Location freedom means you can live and work from wherever actually makes you happy, not wherever the office happens to be. Creative freedom means you build things that matter to you, things you care about, instead of executing someone else's quarterly roadmap for a paycheck that barely keeps up with inflation. And I want to give you a concrete picture of what this looks like, because I think we get so stuck on the $1 million number that we forget what we actually want the money for. Let's say you build an an independent income stream. Whatever it is, content creation, a digital product business, freelancing, consulting, that generates $5,000 a month. That's $60,000 a year. Is that $1 million? Obviously not. But think about what that actually gives you. If your expenses are $4,000 a month, which is reasonable in many parts of the country or the world, you now have $1,000 a month in surplus. You have zero dependence on an employer. You can work from home, from a coffee shop, from another country. You can take a Wednesday off to go hiking without asking anyone's permission. You can scale your income up by creating without waiting for a promotion that might never come. You can invest the surplus into actual wealth building on your own terms. And most importantly, you own the asset, the channel, the audience, the product, the client relationships. Nobody can fire you from something you own. And you built it in 2 or 3 years, not 40. That's the math that excites me. That's the math that the traditional financial planning industry doesn't want you to see, because their entire business model depends on you feeling like freedom requires $1 million and 40 years of patience. It doesn't. It requires building something you own that generates revenue independently of any single employer or institution. And those are things you can start building right now. Not in 40 years, not when the conditions are perfect. Right now, today, with whatever you have. But I'm not going to lie to you and pretend it's easy, because that would make me exactly the kind of person I just spent this whole video criticizing. Building something on your own is hard. It's really genuinely unglamorously hard. It's editing at midnight when everyone you know is asleep. It's posting content that gets 14 views while someone else's video in the same niche gets 2 million. It's being 4 months in and having nothing to show for it financially, while your friends are spending money from their comfortable corporate paychecks. It's lonely. It's frustrating. It's filled with self-doubt. And there will be moments, many of them, where you seriously question whether any of it is worth the effort. I need you to know that every person who has ever built something went through that same phase. Every creator, every entrepreneur, every person who went from zero to something real. They all had a phase where it looked like nothing was working, where the results were embarrassing, where giving up felt like the rational choice. The difference between them and the people who stayed at zero forever isn't intelligence. It's not talent. It's not luck. It's that they kept going when it sucked. They posted the video that got 11 views. They sent the pitch that got rejected. They launched the product that nobody bought, and they did it again the next day and the next, and eventually the compound effect kicked in, because building something independently works exactly like compound interest, except faster and entirely within your control. Month 1, basically nothing. Month 2, basically nothing. Month 3, a small flicker. Month 6, real movement. Month 12, you're in a completely different universe than where you started. But most people quit in month 2 because they expected month 1 to look like month 12. And that's like going to the gym one time and being upset that you don't have visible abs. The results come from consistency applied over time, not from any single action on any single day. And I want to talk about the mental side of this for a second, because I think it's actually the biggest barrier. Bigger than money, bigger than skills, bigger than algorithms or competition or market saturation. The biggest barrier is the story you tell yourself about who you are and what you're capable of. Because when I was in that 3-year consumption loop, the real thing holding me back wasn't lack of knowledge. I had plenty of knowledge. It wasn't lack of tools. I had a phone, a laptop, an internet connection, and access to every platform on earth. What held me back was a belief, a deep, quiet, persistent belief that people like me don't make it, that this stuff works for other people, for people who are more charismatic, more attractive, more talented, more connected, more something than I am. And that belief kept me safe. It kept me comfortable on the couch, consuming instead of creating. Because if I never tried, I never failed. And if I never failed, I never had to confront the possibility that maybe the belief was right. Maybe I really wasn't good enough. And here's the thing I didn't understand until I actually started. The belief was a lie, not because I'm secretly exceptional. I'm not. My first videos proved that beyond any doubt. But because the bar for starting is so much lower than the bar your fear sets in your imagination. In your head, you need the perfect setup, the perfect niche, the perfect thumbnail, the perfect hook, the perfect editing software, the perfect time of day to post. And because you can never achieve perfect, you never start. But in reality, you just need to be slightly better than someone who's doing nothing, which is most people. And that's a bar you can clear today, right, with what you have. And every day you show up after that, the bar rises a little bit. Your skills get a little sharper, your content gets a little tighter, your understanding of what works gets a little deeper. And before you know it, you're operating at a level you couldn't have even imagined when you were paralyzed on the couch 6 months ago. That's the compound effect of action. It doesn't just build your income, it builds your identity. You start to see yourself different, not as someone who watches, as someone who creates. And that identity shift, that internal rewrite of who you are, that's worth more than any dollar amount. Because once you see yourself as a creator, as a builder, as someone who makes things happen instead of waiting for things to happen to them, you can never go back. Old version of you is gone, and the new version isn't limited by the same fears and excuses. And I want to be clear about something. I'm not anti-traditional finance. I'm not telling you to never invest in the stock market or to never buy a house if the opportunity presents itself. Those tools still work. They just can't be your primary strategy anymore because the entry requirements have become impossible for most people in our generation. What I'm saying is that the order of operations has changed. The old order was get a job, save, invest, wait 40 years, become a millionaire. The new order, the one that actually works for Gen Z, is build a skill, create an income stream you own, use that income to invest and build wealth on an accelerated timeline. You're not skipping the wealth building part. You're just front loading it with entrepreneurial income instead of backloading it with decades of patience you can't afford. And that's a fundamentally different approach, one that our parents' generation didn't have access to because the platforms and tools didn't exist yet. But they exist now, and they're free, and they're waiting for you to use them. So here's what I want you to walk away with. Gen Z is not going to become millionaires through the systems that built millionaires in previous generations. The housing market is priced against us. The student loan system puts us in debt before we even start. The stock market requires capital and patience most of us can't afford. And the traditional career path offers less real stability than at any point in the last half century. And I think that's actually good news because we have something no previous generation had. We have global distribution platforms that are free to use. We have the tools to build businesses with zero startup capital. We have access to knowledge, communities, markets, and audiences that would have been impossible to reach even 15 years ago. The old road to $1 million net worth is closed for most of us. Let it stay closed because the new paths are faster. They're more accessible, they're more independent, and they're more aligned with the way our generation actually wants to live. Not grinding for 40 years inside someone else's company. Not waiting until 60 to use the money we earn in our 20s. Not betting our entire futures on a housing market and stock market that have demonstrated repeatedly that they can and will implode. Building something real, something we own, something that generates income now. Not in 4 decades, now. And most people watching this video are going to do absolutely nothing with it. I know that. You know that. That's just the statistical reality of every video. Like most people will watch, feel a burst of motivation that lasts about 12 minutes, and then open another app and forget this conversation ever happened. And that's fine. That's always been the case. I'm not talking to most people. I'm talking to the small percentage of you who are actually ready, who have been thinking about starting something for weeks or months or years and haven't pulled the trigger yet. If that's you, here's what I want you to do right now. Drop a comment below and tell me what you're starting. Write it out. Make it public. Because when you put a commitment into words and share it with other people, it stops being an idea and becomes a plan. And then actually do it. Not Monday, not next week, not when you have more time or more money or more clarity. Today. Start today. Because here's the truth that makes people uncomfortable. The next 12 months are going to pass whether you take action or not. 12 months from now, that calendar date is coming regardless of what you decide to do between now and then. And 12 months from now, you can either be exactly where you are right now. Same frustration, same bank account, same scroll habits, same distance from the life you want, or you can be 12 months deep into something you built with your own hands, something that's generating income, something that's creating momentum, something that's proving every single day that the traditional path isn't the only path. That choice is yours, and it's yours alone. Nobody else is going to make it for you. Not your parents, not your teachers, not your boss, not some guru on YouTube, not me. I can give you the information. I can share what I've learned. I can tell you what worked and what didn't, but the decision to actually start to close this video and open a blank page or pick up your phone and record something, that decision has to come from you. And I know how scary that is. I know because I felt it. That moment right before you post your first piece of content where your thumb is hovering over the publish button and your brain is screaming every possible reason why this is a bad idea. Your friends will judge you. Nobody will watch it. It's not good enough. You don't know enough yet. You need to learn more first. And in that moment, you have to push through because on the other side of that fear is everything you want. Every creator you admire felt that same fear before their first post. The only difference between them and the millions who never posted is that they pressed the button anyway. So press the button. If you want to keep this conversation going, if you want honest talk about building wealth outside the traditional system, about YouTube, about content creation, about what's actually working right now, people who are starting from zero with no connections and no capital, subscribe and hit the bell. I'm going to keep making these because this is the conversation our generation needs to have. Not another lecture about compound interest interest we already understand but can't afford to participate. Real talk, real numbers, real strategies from someone who's actually doing it alongside you, not from some mansion pretending to know what it's like to start from nothing. That's our conversation for today. We'll talk again very soon. Take care.